Hey traders, welcome to another crypto market update. This video we're going to be talking about some correlations and then going to be looking at an inverted chart of BTC as well as a normal chart of Bitcoin, and then trying to do some TA on both the inverted and normal, trying to create less bias and kind of integrating fundamentals into it as well. First thing I just want to quickly touch on is the Chinese yuan and the digitization of their currency is actually going to be pushed here pretty recently to actually be implemented into cities, and we'll look at this little post right now. A number of Chinese media outlets have published reports outlining the central bank's plan for the digital yuan, which is set to make its debut as test bed sites next month. Multiple reports from outlets such as Sina, Shenzhen Foresight, as well as China Trade News and the Shenzhen Observer have published reports about the Central People's Bank of China, or PBOC's, plan for the introduction of the digital yuan, known as the Digital Currency Electronic Payment, DCEP, in China. So definitely they're taking it very seriously. They're actually going through with it, and it looks like they're making some power moves here within the currency technology side of things here. So let's continue reading. The timing of these reports may also be linked with the fact that the internet searches related to Bitcoin and cryptocurrency have risen fast in China, since reports earlier this month confirmed that the PBOC was about to greenlight the DCEP testing in Beijing and other cities in May. So it's not like they're just testing in very small countries, or not countries, cities or townships, but they're testing it in massive cities. Share prices in a select number of blockchain firms have soared, leading to many of them to deny they are engaged in extensive digital currency related activities, but they are seeing hype and demand and money flow into the cryptocurrency sector, which is great for the entire market. Earlier this week, the CEO of crypto exchange OKEX, founded and run by Chinese entrepreneurs and once based in China, enthused about the DCEP's potential knock-on effects for the crypto industry, calling the token a game changer for cryptocurrencies. But we do have to understand these are centralized ledgers that, me, you, and other people won't be able to actually see. This is going to be a centralized, basically censorship, not weapon, but a way for central banks to basically know exactly what you spend your money on, to understand all the transactions that you are going to be making. So I personally don't think it's a positive thing for privacy. It will be very beneficial for streamlining the process of, for example, giving individuals money, like we see in the United States. If they had like a Fed coin or something along the lines of that, they would be able to more quickly send funds to individuals in times of distress, need, and turmoil, which is a very powerful thing. But with a blockchain, with a ledger that only the central banks are able to see, this is going to allow them to know exactly what you spend your money on, where, what time, everything. Your entire financial life is basically taken account for and being very, very analyzed carefully if this actually does go through. They'll know everything you do in your finances. If you don't want that, you might want to be looking for privacy coins, but basically a central banked digital currency will not be decentralized. It is invading your financial privacy, in my personal view. All right. Right here, the author adds that blockchain technology is only one of the features of the DCEP, and it points out that while Bitcoin and other cryptocurrencies are decentralized in nature, the DCEP is very much centralized with the PBOC in control. So definitely any other country or central bank that creates a digital currency will have full view of all the financial transactions that are taking place within a nation. So, basically you will not have any privacy if this does go through, and basically an entire nation switches over to electronic forms of currency. Just my 2 cents. All right, so talking about some correlations here, we do see that there's a little bit of a dip, but BTC overall is pretty highly correlated with the more traditional assets like the S&P 500. We see that the positive correlation is still above 0.3. It's around 0.3 0.34 right now, 0.339, and it does not look like it's really slowing down. If we zoom into the smaller time frames, we can see that it is curling a little bit, but overall, for the entire month of March and April, we've seen an incline in the positive correlation between traditional assets and Bitcoin. So basically, if you are long Bitcoin, if you're long bias Bitcoin, you are assuming, in my view, that you are not going to get another leg down within the traditional assets, unless you get a massive spike in uncorrelation with BTC and traditional markets. But in my personal view, it does take time. If we zoom out here, yes, that was a pretty sharp rise, but that was basically from February, and we can see if we zoom out even further into different times where we had high correlations, it takes time for correlations to decouple. It's not instant, and I do think that if we get another leg down within the equities market, BTC is a risk on asset that is still perceived as a speculative instrument. I don't think that investors are worried about inflation, and the numbers do not show any real inflation just yet. The CPI numbers around the globe are not showing any real true inflation in any first world countries yet. So my personal view is that in terms of the macro, right now, BTC is not really necessary, but as time goes on, as central banks keep on printing, and especially if the money flows into Main Street, not just Wall Street, you'll start to see the price of goods and services go up, because the money is now being given to Main Street, everyday individuals, and there's a greater pool of currency competing for the same number of goods and services. Actually less now because of the supply-demand shock, the supply chain shock of people in farming and dairy and meat and other sectors that have to throw away products and food and other things because of the lack of demand. And then once they go back up and running again, obviously you can't just instantly grow a pig or milk cows. It's not as instant as people like it to be. So there's going to be a glut in the system because there was a lack of demand at some point in time. So then when there is going to be demand up and running again, there might not be enough supply to kind of get the product services out there. So you might see that also play into effect for the cost of the goods and services. So yeah, definitely not yet in my personal view. Looking at another correlation, Bitcoin against gold. This is the correlation within 90 days seen from June 2019 until the present day. And we've seen there has been a little bit of positive correlation. We've got the high here over 0.25 positively correlated, but overall we're not really seeing a whole lot of correlation for Bitcoin against gold right now. I'm going to get a little bit of water and then we'll continue on. All right, next topic is going to be the hash rate. We see that it's almost peaked its all-time high for the hash rate. Let's go to all-time. We're almost at the peak for the hash rate here if we go to 1 year, very, very close to it. So this is going to create more of a squeeze for the miners who are inefficient, because an increasing hash rate means that it's going to increase the cost of electricity to mine one Bitcoin. And if you're inefficient, if your cost to create or to mine one Bitcoin is higher than above average, if the price of Bitcoin decreases, you're going to have a smaller, thinner margin of profit. If that margin gets so razor thin or negative, you're obviously going to have some problems. You're either going to have to sell more Bitcoin that's in your treasuries to pay for the operation, or if you don't really have much assets to sell in your treasuries, you may have to liquidate your position. You may have to basically go bankrupt, which is in the long term obviously very beneficial for the network, because it kind of culls the inefficient miners and flows the capital to more efficient miners who are reinvesting into their operation. So let's talk a little bit about difficulty. I think this is a really good little paragraph talking about the actual difficulty and gives a really good understanding of basically what the structure is. The difficulty is adjusted every 2016 blocks based on the time it took to find the previous 2016 blocks. I find this absolutely genius from Satoshi, which is the creator of BTC. At the desired rate of one block each 10 minutes, 2016 blocks would take exactly 2 weeks to find. If the previous 2016 blocks took more than 2 weeks to find, the difficulty is reduced. If they took less than 2 weeks to find, the difficulty is increased. The change in difficulty is a proportion to the amount of time over or under 2 weeks the previous 2016 blocks took to find. I find that extremely genius, and it's kind of like commodities in that the overall price is going to be how much it costs to actually produce it or to mine it or to get it out of the ground. Obviously, we've seen oil absolutely in capitulation, but this is the idea of Satoshi Nakamoto is the price of an asset is related to the actual cost to produce that asset or to get it out of the ground or to mine it or whatever the commodity is. So let's look at the next block that is going to get created here. Date to the next difficulty adjustment. It's in 6 hours, so it's coming up here for the date of the next difficulty adjustment. So every 2 weeks, roughly, like we've talked about, there's going to be a difficulty adjustment, and it's going to be happening very shortly. Does that mean that something's going to happen to the price? No, not necessarily, but when the halving does occur, that will create a massive shock for the miners. But until that moment, I just don't really have too much confidence in shorting it because we've seen so much momentum to the upside, and I think we could even see a little bit more of a push. We will get into the charts here. We've talked about the fundamentals. To be completely honest, I am going to take less consideration of the fundamentals other than the fact that, yes, the halving is a very significant shift and a catalyst for the market, and also a catalyst which has real world situations where miners are going to see the revenue cut in half. This is a true fact that will appear within the market with a reaction due to the fact that there's going to be a lot of miners who are going to have difficulty being able to continue operation with the revenues cut in half. So let's now go to the charts here. We've talked about an inverted chart that we're going to be looking at, which we'll talk about and analyze before we get into the normal scale chart. So let's zoom out of here and then go into the inverted scale. This is going to be the weekly chart of Bitcoin inverted. So we can see this is that massive 2017 bull run, which looks like a huge bearish leg to the downside. And then this is when we started after 2018 of our bear run, which looks like a little bit of a consolidation, which looks similar to the structure we saw in 2013, 2014, 2015-ish before our massive move to the upside. So there are a lot of similarities that we can see in terms of the symmetrical triangle, the pendant, whatever you want to call it, that we currently see. So basically, if we look at how the last pennant or symmetrical triangle broke out, we played around within the resistance there a little bit. We pushed to the support. We had a very significant support zone that was held for a while, and then once that broke, once the secondary support broke, we saw a huge move to the downside, which in my opinion kind of started the major momentum to the downside. And then once you started to see that low break, you just saw a massive move to the downside. So kind of looks similar to what we see now. We see an ascending channel. We see an ascending channel that broke to the downside. Now we're seeing the secondary ascending support hold. And I think after this ascending support holds, we will get a major momentum move. It will take months and months. It's not going to be like BTC is going to hit 40, 50K in a matter of weeks. It will take time, but I do think once this support zone does get broken, we will have a significant breakout to the downside on this chart, but on the actual price of Bitcoin, we will see a massive move to the upside once we do break this ascending support, which would be a descending resistance on a normal chart. So Yeah, it looks pretty similar. In my view, I think we will consolidate here a little bit longer. Looking at the chart, we will get a move to the upside on this chart, on this inverted chart. In my opinion, post the halving, due to the fundamentals of the miners capitulating and them having to sell assets in order to actually pay for the electricity, pay for the tools, I guess you could say, the mining rigs, as well as all the employees and whatnot. But that is just a speculation due to the fundamentals. But in terms of the technicals, definitely still not wanting to enter short just yet. We do see that the price is nearing that key level of support, although we don't really see any consolidation just yet, and we'll talk about consolidation before we jump into the smaller time frames. But we see in these reversals, this is why I was so surprised. You see in a decent amount of reversals, you're going to get consolidation where you're going to get some level of a retest before you get a major reversal pattern. We see that a low here, you get a test of the low, although it didn't hit all the way to the very bottom. You're going to get these retests. Same with here. You're getting retests of the lows. You're getting retests of the highs. Although at the very high, you didn't get a major retest. You did get some level of a pullback. And we didn't really see anything of that nature, of the massive 50% move to the downside, which is a huge bullish push here. So that was a little bit surprising, to say the least. But I do expect it to not just absolutely moon. I am going to be looking for short exposure post the halving on a very, not scalp, but a quick trade. I do not think that this bearish move is going to last very long. I think it's going to be a little move to the upside. We're going to get a long wick, but at the end of the day, I am pretty bullish on BTC on a larger time frame view. Just to go over it, we see a key level of support. We see a wick protruding, wick touch right here. Another really nice, well-respected support. So we see a key level of support here, and we see the prices nearing this zone and confluence with the key level of support and resistance we see within the previous price action. So we are nearing a key zone of confluence here where the price could see some, in this chart, demand, but I don't want to be too quick to be looking to enter long here, because at the end of the day, I do expect some level of a pushback. Around 58.6K would be ideal, which would be a very good range for us to see, which would be in confluence with not only our horizontal zone from all of 2018, but also our descending zone with a anchor point. We see 1 rejection, 2 rejection, 3 with a major rejection with a wick protruding above the zone, but the candle closure is right at that key level of resistance. So then that creates our nice zone of confluence where there's going to be sell pressure around this zone right around here. So what I'm looking for is a potential move back to the upside on this chart to potentially hit around the 6K 58 zone. I don't really want to be looking to go beyond that, because I am overall long-term bearish on this chart. But in terms of the potential opportunities that we're going to see in the near future, yes, I was looking to short this wedge right here. Did not work out. Tried 2 attempts, did not work out, and I was being patient, and it just didn't give me what I was looking for. So I was basically not active during this little pump up here. Hey, that happens. I'm not needing to trade every single setup. I know looking back at it, it would have been a good little squeeze to the downside, because once it broke this little wedge, it was definitely a high probability situation that we were going to move back to the downside, because a lot of momentum, basically no confidence from the buyers. It was very, very sell bias here, and definitely looking back, good opportunity, but that is all right. As a trader, you will never, ever be able to capture 100% of the trades that you see hindsight. Got to accept that, got to live with it. So looking at the forward-looking opportunities here, let's now jump into the daily and then discuss some potential opportunities that we could see here that would be a reversal pattern that we could be looking for to make another move to the upside here for the final kind of push down, because I do think after this capitulation from the mining cycle, I do think that will be a really, really great opportunity to be entering in a long position, or to be dollar cost averaging in on a weekly basis or whatever, because in terms of the larger macro scope of BTC, it couldn't be more bullish. Bitcoin couldn't be in a better place to receive a significant amount of demand post capitulation, because I do think it's a little bit overvalued right now in terms of where we could be post-halving. So I think that the aggression to the downside, which would be upside on this chart, could be a little bit more aggressive than I once thought. But at the end of the day, I'm not expecting a move all the way to like 3K or something. I'm expecting a move to maybe 58, which would be, let's say, a 30% market cap decimation, which sounds like a lot, but on the larger time frame, that is not unheard of. Obviously, we've had moves that are far greater than that. So in terms of how far we're going, potentially, I do think that around 58.6K wouldn't be too far to be moving here to the downside due to the momentum shift of the catalyst of the BTC halving. So now let's discuss a little bit more of the actual potential reversal pattern we see right here. So let's get our snip and then discuss what we can see on the smaller time frame. So this is a daily, still a large time frame, but the main thing I'm looking for is we initially see a large pattern right here. The first one being a descending wedge. So we got our resistance zone right here, which won't change much. That's going to be the main zone that we want to see break before we see a potential move back towards the upside. But we have two zones initially. We had this zone right here, which was creating our wedge. That broke, and then we now are looking at the next zone, which is created right here, like so. So in my view, we see a resistance right here, as well as a resistance using this descending trend line. And now we're going to get a little bit of a squeeze where we're going to get downward pressure due to a couple trend lines, and we're going to be looking for lows to hold around here. And then we're going to get some squeeze where we're going to sell pressure and buy pressure from above, where we're going to get a squeeze. Apex is going to be right around here. And then, we're going to be looking for that reversal pattern where that squeeze is going to move back towards the upside, where you're going to have a break of this descending zone. You're going to get some reversal pattern somewhere here. We'll talk about that within the smaller time frames, but on the daily, that is what we're seeing. We see a major key level of demand around 95 to, let's say, 99, let's say 10K even, like right around here. That's going to be the major level of demand. I'm not really looking for longs. We could spill a little bit further when we get to the smaller time frame. We did see a nice ascending zone. Could see a little bit more of a spill to the upside, which would be a downside on this chart. But at the end of the day, I do think the higher risk-reward situation is going to be back to the upside to try to capture this next major market move. Now let's go over to the smaller time frames, looking at the 4-hour, understanding what all of our larger time frame charts and trend lines are basically meaning. Okay, so this is the 4-hour. Let's take another snip and discuss this time frame even more. So we already talked about our two trend lines. We are currently holding this zone right here. We see that it was a pretty well-respected zone. Support, 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 support right here, and a support, creating resistance, resistance. So that's going to be our key supply zone that's pushing the price, creating lower highs. We do see a little trend line with an anchor point 1 and then a 2. So we do see a little bit of a symmetrical triangle here formed. Could get another break of the support, which would be a potential move at least to the low, if not a little bit higher. So then what we're looking for, if that's the case, is if we do see a push that is going to be greater than this low, we could see a head and shoulders like we saw within, let's just look right here. We saw head and shoulders, left shoulder, right shoulder, and a head. And we could see a potential head and shoulder. That would be quite a long, drawn-out consolidation. If that does inevitably appear, that could be a potential small short-term trade where you get a little bit of short exposure to get the trade or get the price from the breakout of this ascending support to complete the move that would then test the larger weekly support that we have that the price has not yet hit. So that would be a potential opportunity, kind of squeeze out the last little bit of the major move to the downside. But I do think the next big move is going to be to the upside here on this chart, and the major zone that we want to see break is around the $8,600 zone. If we do hold this nice ascending support, let's just make it bigger. If we do hold this nice ascending support, it could be an ascending triangle pattern, which would be pretty bullish and be looking for a break of the $8,600 resistance. If that's the case, we would be testing this zone right here, as well as in confluence the key level of 7,600. And let's just make that a little bit smaller. And then we'll be going over some different charts if we do see a break to the downside. I'm just gonna make sure those are all smaller. And then go into the normal chart we have for BTC. So that was the inverted chart, understanding how we structured that from top down, weekly, daily, 4-hour, and 2-hour. We could then look at the same chart but normal. That was a previous inverted one, and this is the normal chart of Bitcoin. Very, very similar structure we have within the large time frames. Moving on to the daily, we also have a very similar structure that we can see right now. We actually did not incorporate this trend line just yet, which we will do right now. Let's just go to the smaller time frame and then go from here like so, and we'll make that red. And then let's go to the smaller time frame here. Oh, that should be for the daily. We'll go to another tab. So this is the 4-hour time frame, which I'll be kind of looking at for this next major market move. We can even go to the 6-hour for a little bit larger view of kind of what we're looking for a potential BTC short. But what do we see right now? In my personal view, definitely still too early to enter a short, because this is going to be where we have our potential volume distribution phase, where we're going to have some price action pattern, create a consolidation around this zone. Could be that descending triangle we've already drawn in, could be a potential move up higher, and then another low, and then that could be the left shoulder, it could be the head, could be right shoulder, right around there. We don't exactly know. I'm going to be remaining very, very patient. But one key zone that we do see that is very significant in my eyes is going to be around that 80, let's say $600 key level of support. Once that breaks, we see a lot of these ascending zones get broken too. So this is that one ascending zone. This is another ascending zone right here. And then we see another one. And we see another one right over here. So we see a lot of support holding the price up around this zone. So there's going to be, in my opinion, quite a battle to actually get the price down. But in my opinion, once it breaks the around 76 range, it's not going to take that long to go to our final target of 57, 58, maybe 6K in my personal view. And why do we think it's going to go all the way there? Let's look at the larger term time frame, 6K zone at 2018, and then we see that this ascending zone that is currently holding up the higher lows is going to be around 58, 57. We could get some over-exaggeration that leaves significant wicks like we saw on the last major sell-off. But in terms of where the major demand zone is, it's around $5,800. I don't really want to go beyond that, because in the larger scope of BTC, I am a very big bull. But on the short-term time frames, what we could be seeing within May and June, I just don't see it being extremely bullish just yet. I am looking for shorts, and I was looking for shorts kind of around here, and I just stepped off the pedal and just said, you know what, I don't really see any shorts in the market. They're getting stuffed pretty hard. We got stuff there, we got stuff there. So at the end of the day, if the markets are remaining, what's that quote? The markets can remain irrational more than you can remain solvent. And obviously, it's a little bit difficult with BTC because it's more speculation. It's less fundamental, if you kind of know what I mean, in terms of what statistics you can get out of the network of Bitcoin compared to, let's say, economic figures like the S&P 500. You can look at GDP. You can look at a bunch of different things. You can look at, in terms of economics, you can consumer confidence. You can look at PMI. Yeah, there's a bunch of stuff that you can look at. But at the end of the day, Bitcoin is less, it's harder to find value, like actual, what is a valuable, fair value for BTC. And it's definitely not easy, but yeah, I definitely do think that we could see another potential opportunity for a short. I've been short for a while. I'm not short, like I haven't been in a short, but I've been short biased for a while due to the fundamentals. But in my personal view, because of the correlation with traditional markets and the fundamentals of the miners capitulating and the halving coming up, that's going to create some level of a catalyst. I do think that, having a long bias right after the halving might not be the best idea. I think that we will have quite a bit of a sale where I will be looking for longs, and after that capitulation, after that major leg down, that's I think going to be the final move that we could see here. That's going to push the price to test those higher lows again, and then if that does hold, I am going to expect that to hold, and ideally going to have a decoupling from traditional markets, and BTC is going to be on its own pathway where we're not really going to see that positive correlation continue. That's going to be the ideal situation for Bitcoin, because then we might see a spill. That's going to be in my opinion, ideal situation. We will see a spill, and then that post-spill is when we will have the best opportunities to look for an opportunity to buy, and then by that point, we might see some consolidation like we talked about within the previous major market breakdown. If we look on the weekly, on the inverted chart here, let's see what happened before the last major bull run. We had a time where we consolidated for a while, and then once we started to see the major momentum after the second ascending support is broken, you get a major bull run. Definitely post the halving, talking months, not weeks, and we kind of are setting up for that situation as well, where we might get some consolidation with this ascending support zone. I wouldn't mind if we do hold this a little bit longer. I am anticipating this to have a little bit more of a bullish move back to a major level of resistance, but in terms of where we're going to go in 2021 up to 2022, I do think we're going to get a huge bull run here. Don't know the price. Definitely, I think in the hundreds of thousands in terms of where we're going to go in the next bull run. Plus 100,000, not maybe hundreds, talking in the 5, 6, 7s, but in the 100 plus thousands is my personal view of where we could go here. So yeah, it's definitely a long-term patient game if you are trying to get the major market moves. Definitely could have captured more on this major bullish push that we had here, but that is life. You are not able to get every single trade opportunity, and you just got to live with it. You're gonna fuck up sometimes. That is life, and you just got to learn from your mistakes. You got to learn to be adaptive. You got to learn to basically collect information on yourself and then self-analyze. I know it's not fun. I know it can be difficult to always be critical of yourself, especially if you are originally self-critical, which I definitely am. It's definitely a challenge to sometimes keep morale or confidence to some degree if you are self-critical, but that is the only way to improve. If you're not looking at your failures and trying to understand them, trying to pull information out from them that is going to help you in the future, you will not be good enough in order to sustain this for the long haul. You have to be self-critical, in my view, in order to see progressive results in the market. So let's go into the 1 hour. We do see a little bit of a break here to the downside. If we're continuing in this descending triangle pattern, let's just talk about the 1 hour here. We see, like we talked about, this major level of support at around 86, 85, 50 zone, where you see a lot of demand keeping the price above this zone. So that's going to be my major key horizontal level of demand that I'm looking at the price to see if it's going to break. And then we have the anchor point right here. We have 1, 2, and 3 zones where we have the price rejected descending level of resistance, where there's going to be a level of sell pressure coming into the market, creating a nice descending triangle pattern. We've seen this pattern form a top before. Looking at the 4 hour time frame, we see that was the top of February at the start of March before we had that major move to the downside, and we've seen that this top has formed and is a pretty solid pattern if we are able to get that major move to the downside, breaking a key level of support. In this previous market top, it was around $9,600. In this current potential market top, if this descending triangle does break to the downside, we're looking at a major market support that's going to be creating a potential resistance at around 8,500, and then we'll be looking for continuation patterns once it does break. We might not get that retest right to the $8,500 zone, but after this break, we are looking for major continuation patterns. We can see that right here. This was a very, very nice squeeze continuation pattern. We saw like this, and then we get our resistance. It may not be absolutely perfect. Yes, it did break to the upside, but once it plummeted, breaking that previous resistance, new support back down, and then forming that bearish engulfing candle. Definitely you are looking for shorts when it does break that major level of support, and that's what we're going to be looking for within this potential move to the downside here. So it could take a while. We know that the catalyst is still a week away, which we're talking about the halving here on May 12th. So we do got a little bit of time, but at the end of the day, patience is going to be key here. And, you know, it's good that we don't have a bias and stick to it and stick to it and stick to it, because if you had a short bias, you would have been absolutely wrecked if you're shorting all the way up. And, you know, looking at previous price action, obviously looking at some breaks of key levels of resistances we can see right here, definitely would have suggested that would have been a good opportunity to long. And I was talking about if it does break, it could be a shift in a trend. But my bias, the correlation within the S&P, just, you know, in times where there's major market turmoil, I don't exactly know what's happening. I'd rather sit out, learn, try to understand, and just basically be a student instead of not really knowing what's happening, not having enough confidence to enter, but still wanting to trade because the markets are moving. Just because they're moving doesn't mean you have an edge. You need to have an edge in the market to actually place a bet, or else you're just gambling. And I didn't, other than TA, I just didn't have enough conviction to be entering long here. Other than TA, it did look bullish. I give it to you after the break of this resistance, but during this push to the upside here, until, you know, mid-April, it just looked way more bearish in my view. Until we saw a break in April 22nd, then it looked a lot more bullish. But before that, it just didn't seem like it had the oomph to push higher in my personal view. So if you don't see that, you don't really want to enter. And, you know, did leave money on the table there, but that is life. That's what you're going to be as a trader. You're not going to get every single move. But, you know, with this potential move coming up, I do have, in my opinion, more of an edge, and you got to be patient as a trader. It takes time. If you're day trading, obviously every day is a new day, but if you are longer term swing trading, using fundamentals and technicals to your advantage, using weekly, daily, 6-hour, 4-hour charts, really looking at swing trades that are going to be capturing, you know, decimations of market caps upwards of 20-30%, you are going to have to be patient, because these types of moves take a lot of time to actually come to fruition, right? So that's going to be the update. We should have a nice ascending zone here, but we don't. But the major zone I'm looking at is going to be around the 58, 59, 6K zone for a major level of support. So that's going to be the video for today. We really hope you enjoyed it. Some things I'm going to be implementing in my trading a lot more is the use of an inverted chart, because of the bias I had with the fundamentals and me missing out on this leg up. You know what happens, that's fine, but my lesson that I've extracted from that move and me missing out on that move is going to be looking at different perspectives of the same chart. So what do I mean by this? Using the inverted chart and kind of taking away the fundamentals and just looking at the technicals from a different perspective. Because if you flip the chart around, you have a tendency as a human to have a bias between one side or another. If you've made a lot of money shorting, you're going to have a more short bias in the market compared to a long, because you're more favoring a short, because your mind associates shorting more with profitability. And if you're not good at longing, obviously you're not looking for longs, and vice versa if you are the opposite. So obviously brains have biases, and this is just a way that I'm trying to use as kind of a hack to try to kind of curb the bias that fundamentals may play. I do think that fundamentals do have the ability to create more edge in the market when, you know, obviously you have high conviction in your technicals and fundamentals, but if you are using fundamentals and technicals, it will create a bias due to the fundamentals. And fundamentals can take a long time to play out. Look at the U.S. equity market. GDP is contracting by 4.8%, and it was 2.2 or something before. So it's over 6% in actual contraction of the GDP. You're seeing consumer confidence go down. You're seeing PMI numbers go down. You're seeing unemployment at potentially 16% is the forecast. We'll see what the actual numbers are. You're seeing initial job loss claims and continued job loss claims in the millions, in the 20 to 25 plus million people, yet the stock market is going up. So these fundamentals that you are using to analyze the market and create a narrative do not play out instantly. When the market comes out with negative news, when there's a fundamental catalyst, it takes, in my opinion, a while to actually sink into the market. And it may not always, but that's my view. That's kind of the lesson I learned from the past kind of couple months here is definitely technicals are a major player, which I knew that before, but yeah, every day you got to be learning. You got to be basically a forever student, which I absolutely love, but there are always things that you could be learning in the markets that will play a vital role in expanding your knowledge, expanding the understanding of navigating through the markets in a profitable way. So thank you very much for watching. Hope you enjoyed it. If you have any questions, drop a comment section below. But yeah, definitely a little bit surprising. But hey, I do still have high conviction in this whole setup kind of all together. And that's the beauty of risk-reward situations, is if you have a solid risk-reward, talking 3.5, 4, 5, if you're looking at those types of risk rewards, it's, in my opinion, okay to take a losing trade or even two losing trades if you have a risk reward of 4 to 1 or 5 to 1 or 3.5 to 1 or something around the range of that, because it gives you the ability to take a couple losses. Because the first and foremost thing that you need to have as any trader is the ability to take a loss, meaning the ability to put on a trade, have a stop loss, and be disciplined enough to say, I am wrong, I'm going to get out of it, and to not have basically the ego halt your brain and say, I'm right, I know I'm right, I'm going to keep on this trade. Because yes, you may get rewarded for that sometimes, but at the end of the day, if you're unable to cut your losses, you're going to have losses that are going to mound up higher than you could ever imagine. Being disciplined on a day-to-day basis where you are not going to kind of get swings of maybe I'll just say fuck it, maybe I'm going to be super disciplined, that's not going to create consistency. You always got to be willing to take the loss and say, I'm not right as a trader, because we're playing in the game of probabilities. We're not, like, I don't have any edge in any single one trade. But if I take 30, 50 trades when I have a sample size, that is where my edge is going to be playing into the profitability for my system, for myself as a trader. So that is the way we have to look at it. It's not just one trade, it's a series of trades looking at the win-loss ratio as well as the risk-reward, especially when you are taking trades. So that is kind of want to sum up the video. That's kind of the overarching view that I currently have is be patient. In this current market situation, I do think that kind of taking a step back, looking at larger time frames, and kind of slowing things down is, in my opinion, a better way to go about doing this, because we're in the midst of history here in terms of financial markets. In my personal view, we're going to be talking about this recession for the rest of our lives, or depression. It depends on if it's going to be a deflationary spiral where the Fed and central banks can't create inflation due to demographics, psychology of the population, and velocity of currency absolutely dropping, or they could just basically devalue all currencies so much in that there is inflation, but you're going to get basically massive devaluations of currency. So we'll see where it goes. We don't exactly know what central banks are going to be doing, but we will keep everyone updated with all things financial markets, because we are living in a very, very exciting, interesting time, and we're happy to be sharing that with you. So thank you very much for watching, everyone. If you got any questions, drop them in the comments below. If you found this video useful, educational, entertaining, it'd be great if you would subscribe to our channel. If you would like to watch more of our videos, we create videos for people to, I guess, get entertained, educated, trying to understand how we trade in the markets and how we navigate in these crazy, crazy times that we're having right here. So hopefully you enjoyed it. Going to be the completion of the crypto market update. Hopefully you liked it. And until next time, have a good one, traders.